Alright, welcome back to Muteki.com. What we're going to do in this video segment is cover the Euro USD, do a recap on what we talked about last Tuesday on my video if you saw pertaining to the Euro USD pair. Now what we have here on the chart is the 4-hour compression, each candle representing 4 hours of data. What we were looking at on Tuesday of last trading week was the market sitting at this level here around the 1.3915 price level on the Euro USD. Okay, and what I was explaining here, how I anticipated a further continuation of the bear movement here in this market. And what I had also done is set targets in this market that we were going to achieve on a further bear movement, being the bottom here at the 1.3580 price level, which is conveniently overlapping the 987 fib zone with the 127.2 fib expansion. Okay, so that's what we talked about on Tuesday. And we can see here is that this market started to see the bears come back in here, or we can see a movement south continuing, respecting this line of supply from the 4-hour chart, as we can see taken from these massive points of resistance in this overall movement south. Okay, and we can see further on respect here in this market, and that's why I anticipated this to be indeed the area to turn the market. But we did see a continuation movement in here, and what you can see is that the market turned here at the 23.6 retracement level of the movement from the top to this point right here. So what we saw here basically was a few things. Was first, we turned around at this level and we started to see the market coming off. We saw the 610 zone also at this point, creating another point of resistance. And what you can see here in the past is also the fib zones, being 377 there and the 144 right there, were market points that on retracements, as we can see, the market turned at those levels. So as you can see here, there's a lot of confluence of events happening at this point, being the overlap of the supply line with the 610 fib zone. Okay, and we saw a nice price action early on there showing a turn, but we didn't. So what we knew is that a movement was coming in here on the pair, so we saw a retracement. Okay, and what we did is we took our retracements again from the top here to the bottom, had our retracements right here. Okay, and what we also saw was an opportunity to pick up on more data. What we can see here forming was a nice new line of demand in the market. We saw a break of demand here at the 610 zone, and the spill occurred. Okay, and one thing also that was pointing towards this 23.6 is this little piece of information that you can take right here from this movement that broke up above the supply line on the 4-hour compression. Okay, so what I'm going to do is grab my fib expansions. I'm taking the bottom of the movement. Okay, let me redo that. So what I'm doing here is taking the start of that movement that went against the supply line, and I'm taking my fib expansions of that movement. Now this is a 4-hour compression, so we can see that this is a nice little size movement in there. We're talking about approximately a 80 pip movement. We see the pullback being a retracement, then we see the market right here, the 161.8 fib expansion of this movement right here that broke above the supply line, gave us the overlap with the 23.6 retracement, which turned this euro dollar pair here south, and overall targeting that 127.2 fib expansion overlapping 987 fib zone. Okay, so basically there what we covered is what we had. And now let me just go ahead and really quickly, what I want to do here is I want to delete everything and go through it step by step. Okay, so what I've done is cleared my chart here of all analysis except for the fib zones. And what I want to do now, using my fib zones, is also take my fib expansions and retracements of movements starting from the start point of the movement and continuing south. And what I'm going to be looking for in here is retracements and respect of fib expansions and fib zones for profit taking, and retracements for continuations of the movement. So the first movement that we have here in the pair that we can see is the start point here down to this level around the 89 fib zone. We have a retracement in the market, and then we see a continuation. Upon that completion here to the 233 fib zone, we can see retracement here in the market, and then we can see here that this market is continuing south. So what we want to do is take our fib expansions here of these movements, fib retracements, okay, and see what happens. So there are the fib expansions of the first movement. Let's also put our retracements on there. Now what we can see is that we had a movement here below the 89 zone, okay, right here being our first movement. Upon that movement, we saw a retracement here in the market to the 61.8 area, and from there, using our fib expansions, we located the bottom of this movement coming from the 161.8 fib expansion, conveniently overlapping the 233 fib zone. So this first movement here is showing us signs of respect of the Fibonacci's, as you can see. So from that level, what we have here is a retracement in the market. What we want to do is gauge that retracement just to make sure that it is indeed a retracement. We take our retracement key, and what we can see here is that we have an overlap created at the 144 fib zone with the 382 retracement, resistance found here in the market, and the continuation movement has come. So all we need to do is take our fib expansions of the movement start point down to this new movement in here and take the overall picture of what's happening. And what we can see here is our fib expansions of the movement. There is the market here bottoming out at the level of the 161.8. Okay, so here we can see that the market did retrace once again. Now it's retracing here to the level of the 377 fib zone. Okay, so as back here we can see at the 144 fib zone that we had a retracement overlapping a fib zone created resistance. We can also anticipate this happening here. And also you can see forming in here is the supply line. So what I want to do is put that on my screen. Okay, so we can also see now that we have a point where we anticipate this market to turn. We can see that it turns. Okay, and now what we want to do is take our retracements. We can see that we have a 23.6 retracement once again here at this level. Strong resistance created here at this market from all those factors, and we're going to see a continuation in this market south. So what we now want to do is take our fib expansions from this point to this point here in the market and see where this market is going. And now what we can see here is that we have created further levels of profit areas in the market. Okay, and we can see that this market here overlaps the 61.8 of this movement with that 610. And notice how the market comes here, takes that line out perfectly, and then pulls back once again to around the area of the supply line. And then we see the market hang down into this area right here. Now, what we see from this point is the market approaching that supply line once again that has turned it so many times here in the past. Okay, so we anticipated resistance. We're coming again at the 610 zone, which was also, if we take our retracement, overlapping okay, the 23.6 up here, not overlapping, I'm sorry. What I'm saying, it was overlapping here, the 610 with the supply. So this is where I thought resistance was going to come in because I did not think this was going to be a full retracement. But when we saw the break up above here, we knew retracement was coming. A great place here at the 23.6. Now what got us interested here in this market was the break here of this line of supply. Let me add that in the market on the 4-hour compression here. Okay. So we had the market hook back here under the supply line, or excuse me, break the demand line. And what we saw was the market here make a nice rally on Thursday and Friday down to the 987 127.2 overlap area. Now it's amazing here how this market free fell to this area here. But again, this is where the bears came into the market, dominated. What they did is they needed to find an overall profit-taking level, which they could agree to. And that is the 987 127.2 overlap. So that's what we have here on the Euro USD. More to come, so come check us out again. Until then, have a great weekend and take care.